If you're thinking about buying a home, the mortgage process can feel a little overwhelming, and yet it's one of the most important pieces to understand. So don't go anywhere, because today we're going to walk through some of the most common questions buyers have and help make the process a whole lot clearer. Hi, I'm Tina Veltri, a realtor on Florida's Space Coast, and I help people buy, build, sell, and relocate with confidence. Now, I'm really excited today because I'm going to be sitting down with Angel Pacheco from Dyer Mortgage to talk through some of the questions that buyers ask all the time about the mortgage process and what they should know before they get started. Now, Angel and I have worked together often. As a matter of fact, we grew up together, going to Delora Junior High and Satellite High School, growing up in Satellite Beach. And he has helped so many of my buyers through the loan process, whether they were ready now or just starting to plan for the future. Hi, I'm sitting here with Angel Pacheco from Dyer Mortgage today. And Angel, I really do appreciate you spending this time and joining me on this video. We know that home buyers have so many questions when it comes to the real estate process, and even more so as we know about the lending process. So thank you so much for sitting here with me and sharing your expertise.
Thank you, Tina. I'm happy to be here.
Great, thanks. Let's start with a question so many home buyers ask me. Do they need to have 20% down to purchase a home?
Well, Tina, the quick answer is no, you do not. It really varies on the loan type. Some loans are 0% down, for example, a VA loan or a USDA loan. Others are 3% down, typically 5% down for a conventional loan.
So tell me about down payment assistance, because I know you've helped several of my customers with a down payment assistance program.
Yes, there's several programs that will help a buyer who's fund deficient get the money they need to be able to get into the house to assist with their down payment and closing costs. So a buyer who needs help can find help.
Great.
I wish for them to reach out to me, and I will have a full conversation about their overall situation to see what kind of program that I can match them up with. Okay.
All right. So when I'm working with a buyer, I always let them know that when we make an offer, we're going to need to get a pre-qualification or a pre-approval letter from their lender to make sure that they actually can purchase that home. Can you speak on that a little bit about the differences in what you ask the buyer for a pre-qual versus a pre-approval?
Sure. A pre-qualification is really an estimate based on what the homeowner or the home buyer is providing to me. For example, we have a quick conversation. They tell me, oh, this is what I think my credit score is, this, that, and the other. We want to make sure that that's not what you are getting when you're trying to make an offer on a home. A pre-approval is where I've had that same conversation, but then I'm requesting and requiring documentation to support what I was told. I'm going to be pulling credit. That's first and foremost. I'm also going to be requiring documentation. I want to make sure that I have the correct income. You may think you make a certain dollar figure, but this is what the actual number is. So I'm going to be looking at pay stubs. I'm going to be looking at W-2s. I'm going to be asking for assets. I want to make sure that you have sufficient funds to get to the closing table.
Right.
Once all that's put together, I'm building out a profile, and then I'm running it through my underwriting to make sure that I get an approval. That's where the pre-approval comes through.
Right. So big difference.
It's a big difference.
Big difference.
I want to make sure it's all there.
So how do you answer the question a buyer may ask you, how much home can I afford?
Well, we're going to be looking at their debt to income ratio. I'm going to be looking at what debts do they currently carry, what's going to be added on top of that to make sure that they can fall within the parameters of the loan program.
Okay.
So we're looking at their income, their debt, their credit score, the interest rate. All that's going to play into a payment, and that payment has to be able to fall within the parameters of the loan program.
Buyers like to focus just on that purchase price, but you and I both know it's more than just the purchase price when you're figuring out their loan. It's going to be the purchase price, taxes, insurance, and even HOA fees. So can you give buyers a little bit more, information of really understanding that it's not just the purchase price we're looking at?
Right. So when I speak to a potential buyer, one of the things I ask them is, what is your ideal monthly payment?
Yeah.
I like to back into that number for that person. I do ask them what is their price range they're looking at, but I also want to combine it with their ideal monthly payment.
Mm-hmm.
That's going to be a game changer for many people. A payment is going to entail principal and interest payment. It's going to entail the insurance payment, taxes, HOA payments, maybe even flood insurance. We want to have a complete picture of what that purchase price is going to entail, but it starts with me with what is a comfortable payment for you. I want to make sure that they're realistic about what they're looking at so that they can realize their dream.
Right. We've run into obstacles before when a buyer was pre-qualified for a certain amount, and then that HOA fee was a little bit high, and it kind of put a wrench in the whole process. Can you explain that just a little bit?
Sure. So when I do a pre-approval for somebody, I'm looking at all the aspects of that payment.
Mm-hmm.
So for example, I'm going to estimate a lot of these figures because they're unknown at that moment.
Right.
So an HOA fee, some places are very high, others are low. So when they find a property that they fell in love with and they come to me with a HOA payment that's higher than I estimated, and their numbers are tight, then we have to get back to the drawing board.
Right.
How can we make this work? Sometimes it will work, but then we have to adjust an insurance payment. So it might fall on, we have to find a little bit more affordable insurance.
Yeah, and I know you and I have worked very closely before with buyers that were really on that threshold. This was their number.
Correct.
And I've called you and I've said, okay, this is the HOA. Okay, let me figure out the numbers. Okay, this property will work. Let me figure that. No, that one's not going to work. So, I really do appreciate all that you've done with me for my buyers in the past, because I know sometimes with having that number, it can be a little tricky.
Right. So that also plays into the fact that we have a good working relationship, that we understand how we work together.
Right.
And that's important for a borrower to see and understand that we are working together in their best interest so that we can back and forth figure a solution out when something arises.
Yeah.
So that I appreciate our relationship for that as well.
Yep. So once I get a buyer under contract and the loan process is moving forward, what do you tell buyers to avoid as we're waiting for those lovely words, clear to close?
So that's a great question, because I do have to remind people of the prior discussions of not to change your lifestyle. Do not quit your job. Do not change your job. Do not open new credit. Avoid large deposits from what I call mattress money. All these things will show up throughout the process in one way or the other, and it could derail the home purchase. So keep the status quo. Don't make major changes. If you can stay with what we had when we started this process until the end, it's going to be a very smooth ride for you.
Now, I want people to really understand the loan process really can just completely stop and a buyer not be able to purchase a home. We've experienced that before. I think it was the day before closing, was it not?
Yes.
Because of a change in jobs. Actually,
Right.
I think it was they left their job, was going to be starting another job. And there was really nothing that you could do at that point, was there?
No, you can't. At that point, it's pretty much going to stop everything in its tracks.
Right.
We do a verification process during and at the very end before the final clear to close as a condition of the loan.
Right.
They have to have a job. We had a buyer who literally quit their job thinking that because they were going to get a paycheck after the fact that they can show that they're still employed. Well, it doesn't work like that. The thing that I say to everybody, please, if you have any questions, you're thinking about doing something, please reach out to me so I can help you avoid those things.
And I tell everyone that I work with after that happened with both of us, please just make sure you do not do anything unless the lender tells you it's okay.
Yes, heartbreaking, and it happens.
It was, yeah, it was.
Yeah, it really was.
So I've done videos on this before, and I've always talked with my buyers and my sellers about this, about the lender is going to request an appraisal be done.
Correct.
Okay. And so can you tell me a little bit about if the appraised value comes in lower than the contracted price? Because a lot of people really don't understand that, and they believe they can list their home at any price they would like to.
Right. Okay. So an appraisal is requested by the lender. We will request that, and it's to determine what we're able to lend on. So the lender will only lend on the lower of the appraised value or the sales price. And the reason for that is it's used to confirm the price is going to meet the collateral that we are investing in, and it's used to protect both the buyer and the lender.
For someone who is thinking about purchasing a home within the next year, what advice would you give to them?
Well, for anyone looking to purchase a home, in particular a first-time home buyer, I suggest that they start with a full financial review with their lender. Many home buyers focus solely on the purchase price. A good lender is going to be looking at the entire picture. Ultimately, I want to be able to fit their lifestyle today, which will allow them to grow financially for their future.
All right, thanks, Angel. I really appreciate you spending this time with me and doing this video and answering all of the questions that I know buyers out there would like to know.
Sure. Tina, it's been a pleasure, and I enjoyed this immensely. I'd love to do it again with you. If you have any other questions, feel free to come back in, and we'll set up and continue on another chapter.
Yeah, I would like to come back as I'm doing more buyer videos.
Sure.
And maybe you can answer very specific questions when I'm doing that. How about that?
Sure, I'm always game.
All right, wonderful. Buying a home involves a lot of moving pieces, and the financing side of it is such an important piece to understand early on. Now, if you're just getting started, I also have a video that walks you through the home buying process step by step. So that's a great one to watch. And then next week, I'll be sitting down with Bill from Hound Dog Inspections to talk through what buyers should know about home inspections. I'm Tina Veltri, and I help people buy, build, sell, and relocate to Florida's Space Coast with confidence. Make sure to subscribe to my channel as I put out a new video every Tuesday. Thanks so much for watching. I'll see you in the next video.